So we're currently neutral Chinese equities and we're overweight China bonds. And the reason for that is recognizing China was the first coming out of the pandemic. But at the same time, in terms of peak growth acceleration, we have seen that behind us already. So we do see kind of growth slower compared with earlier on this year. And the trade data is surprising on the upside. It's good to see, but we have to recognize that in a very noisy restart, data can be very noisy as well. And if you think about kind of the easing signals from China came out last week, to us, it goes to show that growth data could further kind of soften from here versus earlier on this year, which is why we would like to see growth stabilizing and also clarity around anti-monopoly plan down before we became overweight Chinese equities. But more broadly, in the context of kind of growth slowdown, it's good to see export surprising on the upside. It still goes to show that supply globally is taking a bit longer to switch back online to meet increasing demand, and China is still benefiting from that.
Yeah, fascinating. And it's really interesting to see the regulatory crackdowns on big tech in China right now. Wei Li, when you look a little bit further beyond China, though, how are you navigating the noise, as you put it? What are the other pockets of opportunity that you like across the markets, particularly as we see the Delta variant concerns continuing to spread and this spread on inflation?
Absolutely. So we actually do see inflation pushing higher beyond the near-term restart momentum. So as a result of that, we actually have also made the asset allocation call to upgrade our U.S. inflation-linked bonds into overweight from neutral, and we found that upgrade from U.S. government bonds where we have become further underweight. And we also want to, I want to add a little bit in terms of our US equity view. So yes, we are neutral at this moment, but we see selective opportunities going into the rest of the year, specifically looking at earnings momentum, sectors like technology, sectors like financial, sectors like discretionary names continue to spring well on earning basis. And this is where we would like to be selective within the US equity market.